Welcome to Fundamentals of Internal Auditing. I'm Hernan Murdoch. In this episode, we're going to take a look at four different audit types. To help us better understand these audit types, Kathleen Crawford is going to be with us here during this episode to talk about them, walk us through them, explain them, and compare and contrast their features, characteristics, and how auditors go about performing those different types of audits. Welcome, Kathleen.
Hi, Hernan. Good to be with you.
Nice to be with you as well. So, walk us through the first type of audits.
Okay. Well, we actually have four that we're going to be looking at today. These different types of internal audits are compliance, financial, IT, and operational. And before I get to compliance, I just wanted to recommend that if this is an area that any of our viewers are especially interested in, that they can get anything and everything that they might like to know about it, and the choices that our organizations are making, particularly our audit organizations, in terms of where they're going to focus their attention, from a great book by Paul Sobel. Mr. Sobel writes at length about this concept of a funnel, and I'd like you to think about this concept of a funnel as we go through the different types of audits, because some areas, processes, and systems may have an array of possibilities about how we might approach the project. So it is important to think about what kinds of risks matter and in what context they matter. So first off is compliance. Compliance is addressing any way in which we meet or exceed the expectations of laws, regulations, even policies and procedures that are imposed internally, contracts, and other kinds of obligations. So it's not just a matter of following a law or following a regulation. It also is looking at these requirements that may be imposed internally or may be imposed externally.
Great. So it sounds like compliance reviews are very common to internal auditors and something that they should probably expect to do at some point in their careers. What's the second kind?
The second kind that we're going to talk about is financial audits. These are also very, very common, especially as relates to the way in which the organization spends its money, how it accounts for the flow of money and the flow of other resources, and how it otherwise reports financial transactions. One of the things to think about here with financial audits is that they capture a point in time. So they're historically focused. They may be looking back on a week, back on a month, back on a year's worth of activity in order to understand how did we get to this point in terms of our financial transactions. So the areas of focus could be really quite large, the entire organization, but more than likely, our focus as internal auditors will be on different kinds of commitments, different ways in which we were authorized or unauthorized to dispense funds, to receive funds. So it will be something that auditors should also expect to be involved in. We also will be looking at different ways that the organization safeguards its resources, both monetary, clearly dollars and cents, and maybe property and other things that have a financial impact. So the practices associated with acquiring them, safeguarding them, and then using those resources. And let's keep the definition of resources really, really flexible here, because any of those resources could fit under a financial audit. And finally, the financial statement preparation and supporting documentation. This may also be an area of interest for internal auditors, but external auditors or CPAs have a lot more responsibility in the area of financial statement attestation than we do.
Before we move to the third type, it seems to me that internal auditors will perhaps help the external auditors to some extent. The cost of doing the year-end audit, for example,
Hmm.
for the financial statements is very expensive for many organizations. And Sarbanes-Oxley, which is one of the rules that a lot of organizations must comply with, all of those publicly traded organizations, there's so much testing that needs to happen every quarter as well. I will imagine internal auditors can be very helpful in alleviating some of that burden on the external auditors while saving money,
Hmm.
and they're also familiar with what their internal accounting and financial systems are all about. Is that the case?
Yes, in fact, it's really relevant that you brought up that almost like partnership aspect. So being able to do some of the work in preparation for a financial audit by external auditors is very much in the sphere of activity for internal auditors. You're right about saving money. You're also right about the knowledge base. The knowledge base acquired by internal auditors is often both broader and deeper than external auditors might themselves have. So we can be a partner to them in doing some of the work, what some people would call interim work. So instead of them having to look at a whole year's worth of activity, we might be able to help with some of that interim work, and therefore save some money on our contract with them. But also it's somewhat self-serving for us too. It brings to light, or could bring to light, some issues that need to be addressed more currently than waiting for the outside audit to happen.
It's usually a good thing when issues are identified internally so they
Hmm.
can be fixed before the
Oh,
external parties come
yes.
in and
Yes.
find them, in which case a small problem could become a really troublesome thing
Yes.
to try to address. And of
Yes.
course, you're running against the clock, so you don't have time to remediate. So you want to fix those things yourself. That's great. Now, as far as the third type, can you tell us about that?
Sure. The third type that I wanted to talk about is information technology audits. So much of business, so much of industry is not. We don't have tangible documents anymore the way that we might have been accustomed to. So information processing systems, we're all using them far, far more than the earlier part of my career, and I only see that as escalating and accelerating. So information technology audits matter a lot. Certainly the security and safety and integrity of those systems, but we're also looking at how people interact with them. What are the operations? What are the related practices under which we use technology? And are some of those practices more beneficial or less beneficial? The focus on input and output, what goes into a system, how it processes information, how it comes out, or where it goes. This is also an important area of focus. What about redundancy, backup and recovery plans? I mentioned system security, and every other day we seem to hear or read a story about somebody being hacked. So social engineering with regard to system security, data integrity, and computer facilities. Where are the facilities? Do we operate and have several server rooms on location, or have we sent our processing out into the cloud? Examining the processes of building and or acquiring information systems. This is an area of great interest right now. There
Hmm.
are some things that can affect it. What, things are moving much, much faster in terms of processing speed. And at what point does an organization decide that they would like to be able to move into that space of better, faster, and possibly cheaper?
So
Technology.
as you're describing all these things about IT, it sounds to me as though, although it's not only about the technical things about IT, there are a lot
Mhm.
of business elements that are part of this as well. So in
Right.
terms of making business decisions about acquiring hardware and software and contracting with vendors, is that part of what goes into an IT audit in addition to the typical technical elements?
Sure, absolutely. We want to know what we're being charged and what we're paying for. We also want to look down the line and make sure that the organization doesn't encumber itself for a longer time horizon than would be practical. Because, as I mentioned, the speed with which information technology is evolving is getting faster and faster. So you don't want to find yourself stuck with a brick of some kind of hardware that you're not going to be able to use effectively going forward.
That's very helpful. Thank you. Yeah. What else about IT audits is important? Because one of the concerns that I have when you first said IT audits, I was thinking, well, sounds like this is a very specialized area that a typical business, and we know that all auditors are not accountants, but some people might be a little bit nervous, if not afraid, of
Mm-hmm.
the idea of becoming doing an IT review. But at the end of the day, internal auditors depend on the systems for the report that they later use to do their review. So they need to understand what the systems are doing, how the logic is performing calculations behind the scenes. So these
Mm-hmm.
kinds of things are important. Availability, the operational side can't do anything if the computer systems are down. I think we can all
Right.
relate to that
Right.
problem.
Oh my
So
gosh, yes.
these are all things that they look at as well. Excellent. All right. So how about the fourth type? Can you walk us through that one?
Absolutely. So the fourth type is operational audits. This happens to be my particular favorite. It combines, or it may combine, elements of the previous three, so compliance,
Mhm.
financial, and IT. But part of the reason why I like this one is that it is something that focuses specifically on how an organization uses its resources. So it's financial resources, it's personnel, and when you think about personnel, the knowledge and expertise that personnel possess. So it understanding how resources are used helps us as auditors and helps business solve business problems. As I mentioned, financial audits tend to be more oriented toward the past, oriented toward history. Operational audits tend to be more future focused. So we look at an issue in the present tense and imagine how changing it could be beneficial in future. So as I said, it can include compliance, financial, and IT. Also, another type of audits called administrative audits. And it focuses on 6 E's. Operational audits can focus on any one or combination of these 6. Economy, efficiency and effectiveness. I'll have another graphic about that momentarily, but also equity, ecology, and ethics. So the first 3, economy, efficiency, and effectiveness, I can give you some calculations associated with that, some proportions. But with regard to equity, ecology, and ethics, equity is interested in social change, social expectation, that everyone, our vendors, our customers, our employees, are treated fairly and equitably in all that we do, and that no one receives an advantage that is not warranted or freely given to all. That's
But that can
something.
also
Go ahead.
that can also be introspective, right? If you think
Sure.
about fairness and equity in the workplace, you can think in terms of how employees are treated and making sure there are equal opportunities, and everyone based on merit can also be promoted and
Hmm.
given assignments and various things like that. So it can be introspective or outward bound, outward looking.
Yes.
So I think that there's a lot of opportunity there, especially with labor laws and things like that as well.
Yes, absolutely.
Okay,
Absolutely.
great. How about the next one, the next E?
So the next E in the last 3 is ecology. Our planet, we only have one, or I mean, there are 9 planets, but in the solar system, but the one we're living on right now is a finite space with finite resources. And so the attention to equity, you might wonder, well, why does business care about this? Well, I think business has to care about this because we use the resources of the planet. We use the air, we use the sunlight, we use the water. And so what an operational audit in this area can focus on is whether or not does the organization truly understand what, say it's a manufacturing enterprise, does it truly understand what the impact of its activities might be on the local economy and especially on the local ecology.
Sounds like corporate social responsibility.
Exactly.
Yes. Interesting story that I looked at one point, and it had to do with a company that was putting a lot of pressure on their suppliers. And they were basically demanding that they be more scientific about how they packaged the equipment and the materials, the inventory that they were getting from them. And they wanted to be smaller, better. Of course, you want to protect the contents, but no bulkier than necessary.
Hmm.
And the thought process was, well, bulky boxes create bulkier containers. Containers turn into railroad cars, and more containers that go on boats and ships, and more drivers, and you have to insure the contents. And at the end of the whole cycle, you still have more waste. So by just focusing on how you package, you are doing something that's going to reduce costs in so many ways, but also be good for the environment and the planet. So it's a very interesting way also to look at this, and something that internal auditors also review. So that's important. How
Right.
about ethics? Just what are some of the key things about ethics as relates to this?
Fair treatment, it links back to the earlier point that you made about equity. Is everyone being treated fairly? But it's also about talking the talk and walking the walk. So the
Hmm.
organization is communicating something in terms of its identity, what it stands for, and are we consistent with that ethical position? That we're not violating any rules, we're not violating any laws. So in some ways, it's about fraud, but I'd say it's more about code of conduct. Here's who we are. This is what we stand for. This is what we expect of our team members, and this is how customers can be expected to be treated as well. So,
In my mind, when I think about ethics and fraud, as we think about those two words and what they imply, I usually think about fraud and corruption as ethics gone bad.
mhm,
And when we have a colossal breakdown in ethics, then you end up with fraud
yes,
and corruption and various things like those.
yes,
Turning our attention to the top three, can you
sure.
elaborate on those three?
Yes, in fact, I have another. This graphic allows us to explore efficiency, economy, and effectiveness. So I'd actually like to start with efficiency, which you'll see in the middle of the graphic. It's possible for us to compare actual inputs to a process to outputs. And this particular proportion or this particular objective relates to methods of operations. Are we doing things as quickly as we could, as efficiently as we could? Depending on what's involved here, we might be able to take a baseline in terms of what is expected and then measure and evaluate actual practice or actual actions and activities. Economy is something that relates to an objective that relates to the cost of operations. So if efficiency is about maybe level of effort, then economy is about not wasting any money. Make sure that we're considerate of the costs of the operations. So here we have the means by which to, because it's tangible, it's numeric data. We have the opportunity to look at planned inputs and their relationship to actual inputs of a process or
Okay.
system.
And how about effectiveness? What's that all about?
So effectiveness is about making sure that the results of our operation are what we expected them to be. So here it's comparing outputs to outputs, the planned outputs to the actual outputs. And having, again, maybe having a baseline and then seeing how things change over time. So it's all about inputs and outputs and their relationships to each other in terms of what our objective might be.
Great. That's very, very helpful. So we spent a bit of time talking about operational audits and all the different things that they are geared towards and what we're supposed to be focusing on. Can you give us a little bit of a list and what are some of the key benefits if we were to summarize some of these, since there are so many different things we just explored?
Sure. Well, one of the things that I have found about operational audits is that they often uncover unexpected information. So we may find some undefined goals. We may find opportunities for improvement. We may find some problem areas that were not on anyone's radar. If you go back to the top of the graphic, it gives us a lot of opportunity to recommend improvements, ways in which things might be done better or faster or cheaper. Your point about the packaging in the anecdote that you told a little bit ago, this is a great example of recommending improvements that have long-ranging and echoing sorts of benefits. There may be problem areas that our operational audits will uncover. It doesn't. I also don't want folks to think that operational auditing is done in a vacuum. There may be issues of compliance that we will incorporate. So we talked about that a little bit earlier. Maybe issues that are tangent to financial audits that come up in operational audits. So reviewing for compliance, testing for fraud, these are all under the umbrella of operational audits.
Thank you very much, Kathleen. I really appreciate that and helping us better understand what operational audits are all about and summarizing that because there's a lot of potential there, a lot of benefits that we can extract from those reviews. So thank you very much because overall we have a better appreciation for the different types of reviews that internal auditors can perform and how we can add value to the organization. So thank you very much.
My pleasure.
If you like this series, subscribe to the ACI Learning YouTube channel to enjoy more audit-related content.